Hi everyone, welcome back to another video. So in our last video we talked about the Indiana state, and today we're going to talk about another state, which is Massachusetts state. But before we go into the topic, I would again request all of you to do subscribe my channel and hit that bell icon so that you can stay updated with the latest information about US taxation, in particularly the information which relates to the US sales tax. So again, this is my report. It's the same format that we have used for our previous two states. There's a customer number, there's a customer name, then we have a city, no county here because again, Massachusetts has a flat state tax return tax rate, and there's no local counties or cities which you have to pay extra attention to. And then again, we have these three these three calculated formula, calculated columns. These are there are so, sorry, not for this one. This is flat percentage here. These two are calculated for columns. Again, the same way that we did for the previous two states. So the the state tax rate for the Massachusetts state is 6.25 percentage. And now let's go to the portal and see how we can file this. Again, it's very straightforward return, and we don't need to be very careful on this, although we have to be very careful. We have to reconcile our tax amount, but it's not that complicated like we did for the Alabama one. So now this is my portal. Here you can see this is my return here, and the due date is 31st March 2025. I have told you that most of the US states has a due date of 20th of the following month, and then there are some which has the due date of 30th or 31st of the following month based on that the days of that particular month. Since March is 31st, so 31 days, so it's 31st March is the due date for this. So we're gonna click file now here, and you can see it's a very straightforward return. You can add your sales here, then you can, you know, claim if you have sales for resale, exempt sales, or other adjustments that you want to make. So here I have the gross sales. These are my gross sales, and then these are my non-taxable sales, or you can say exempt sales, or the non-taxable sales. And so there might be a question which you might have, that what are the non-taxable sales? So for the non-taxable sales, we have two things which we have to consider. The first is sometimes the customers are exempt, right? For example, some customers provide their tax exempt certificate. When they provide us with this, we have to, we don't need to put that in the tax on the invoice. The system will not generate tax if you have the automatic system. If you are using any tax software or any tax engine like Taxjar, Avalara, or any other tax engine, and if you are doing it manually, then you don't need to charge the tax on those customers invoice which will have provide their valid tax exempt certificate. And the other, again, uh, the reasons, let me just let reasons for non-taxable sales. There can be there could be two reasons. This is the first one: customers provide us an exempt tax exempt certificate. The other one could be the sales of non-taxable products oblique services. So again, now this again, the system will generate, if you have any tax engine, it will automatically generate which sales or which products are non-taxable and which are taxable. You can also get the information. You can also download the list on from the Avalara or from the Taxjar if you have access to. So sales of non-taxable products or services, this could be another reason. So normally we have two reasons when we have the non-taxable sales. So here you can see, now we have put our gross sales, and we had put our one reason. Yeah, another thing, one reason could be the tax, the for the non-taxable sales could be resale. Normally many US states allows the resale. If you are purchasing a service or the products for the resale, then you can just mark it as a non-taxable sales, because it will be ultimately charged by the end consumer, whoever is using the service or whoever is using the product. So resale. exemption or other adjustments, and then you can put these. So if you see here, we have this taxable sales, and then we total sales. The total tax that we got from the portal is 230.88, and this is what I have on my tax report. So again, it's always a best practice to reconcile both these, the amount that you have on your report, the internal document, and the amount that you get on the tax portal. So I'll click next here, and then you can see here we can just make a payment. You can click it any on any of these, whatever option works for you best. You can click this one, and then if you click next, you can just get the information. You can input the information of the bank account, of the credit card, and then you can make the payment and submit it, and you are done with this. So again, it's very straightforward. It's very simple return of this state. I hope this is an informative video for you. You guys, if you have any questions, any suggestions, any comments related to this, you can just write it down on the comment box, and we can then discuss on that topic or on that issue or that comment. Thank you very much.